Hi, I'm Judy Copenbarger. What is international stock anyway? How do I know if I own any international stock, and should I? And if I should own international stock, how much should I have? Let's take a closer look at international stock right after this. So, international stock. Let's start with stock. Stock is just the ability for you to own a little tiny piece of a big company, to have an equity or ownership interest. International means it's not domestic. That means it's not US based. So international stock is just that. It's global exposure of a growing profitable company. Now we've got several stocks that you might be familiar with. There's NASDAQ, there's the Standard & Poor's 500 or S&P 500, Dow Jones. These are all domestic stock exchanges. This is the market where stocks are traded. They're purchased and sold daily on these markets. We also have exchanges or markets that are not US based. For example, FTSE, FTSE exchange in London. And we also have out of London LIBOR, LIBOR, which is the bond market. Oh, hey, if you would like clarification of anything about the markets or the exchanges or investments, please feel free to leave a comment, send a message, or if you want to get valuable details on the truth about money, then go to judycopenbarger.com and click on the green Discover the Truth button. It's there that we put together a great in-depth course that will give you insight and actionable steps to help secure a future that will put you in a positive direction financially for generations to come. Let's discuss the benefits of global exposure of international markets. Why would I want to invest in stocks around the world? Well, equity performance tends to be cyclical around the world, and that's important because some regions outperform others over a decade, only for the trend to reverse during the next decade. And this is all because of the constant valuation changes. So the benefit of having a globally diversified portfolio is that you can reduce overall volatility, reduce that risk, and increase your returns. The outperformance of one region can make up for the underperformance of another region. So consider overweighting your investments in undervalued areas in developing regions. The lower valuations, they're on sale, right? They can realize hefty profits over time, but please be cautious. There's more risk here. We have unstable governments, economic shifts that we can't see from afar, regulations and trade agreements that we may not be privy to from our perspective, and we won't find out until it's too late. Consider that our stock markets aren't what they were a couple of generations ago. Almost all sizable and publicly traded corporations are global now. Even some of the most common American brands have gone international. They're domiciled in other countries, which means they're headquartered there. They hold subsidiaries in other countries, manufacture in other countries, and distribute worldwide. Chances are that if you already own some U.S. stock or trade continually within the U.S. stock market, you're already diversified internationally. Because you've gained amazing value regarding international stocks, please do me a favor, share and like this video. Hit the bell to receive notifications of other great videos coming up, and leave us a comment about your experience with international stocks. I'm Judy Copenbarger. Thanks for joining us today. God bless.